Interesting trading session today. To think of it, we were largely lying flat for the better part of today's trading session, and then towards the last lap of today's trading session, 2 o'clock onwards is when things took a turn for the worse. Net result, we've managed to close in at the session low, so we were down about 154 points on closing bell for the Nifty futures. Sub the 18k level, 17,987 is where we shut shop for the day. And similar was the price action even for the broader end of the market, neck and neck for the better part today, and then finally it opened well in favor of the declines, closing with a count of 132 F&O stocks standing to the reds, with just about 57 standing to the ups. Let me get you a sectoral flavor first, because there were very few movers today. Automobile, for one, held out, so did technology, and some of the textile plays as well looked okay. But besides that, a large part of the sectoral indexes were in the red, be it banks, be it capital goods. Cement was a rank underperformer today, in fact the biggest of them all. Oil and gas, pharmaceuticals, real estate, power, you had media, metals, they were all a big drag today. Let's first talk about the one pocket that was actually holding out in trade, and that was clearly what was happening with Motown, for instance, because that was one pocket which held out very smartly. The fact that you had a Morgan Stanley note talking about how the chip crunch has actually eased, that was all that it required to bring a good leg up and a rebound to Motown. The Malaysian fabrication plant of Fabs is now back to 100% production levels. So is the case with the manpower as well. And the note clearly indicating that auto chip shortage is now in the rear view mirror. That was enough to send these stocks roaring. So Maruti closed up with a 7% gain. M&M shot up about 3%. Tata Motors was up 2.5%. Hero MotoCorp was up 2%. But a large part of the market was a drag. Banks, for instance, have been rank underperformers month to date. Today was no different. You had all the big boys starting off from SBI, which was down nearly about 3% in the futures, to an IndusInd Bank, ICICI Bank, all of them were deep down in the red. As were some of the large caps like a Reliance Industries, which was down 3.5% in trade, and cement as a pack looked extremely bleak as well. So Shree Cement, Ramco, they were all also underperformers in today's trading session. The one news, of course, which the market didn't react to, at least as of now, has really been the word coming in from the International Energy Agency, stating that they see the end of the oil price rally in sight as production levels have now recovered. The OPEC secretary, in fact, stating that he sees oversupply in the next year, and that there are signals to be very careful of, and that oil supply surplus is already beginning in the month of December is what he foresees, and that we have interest to ensure that global economic recovery continues. So that should actually spell good news for sentiment on India, given that of late we've seen many global brokerages come out and sound off alarming bells with regards to the high energy prices in India and how they're going to weigh heavy on India Inc. margins. But that seems to be taken care of, given that this news is going to mean that you will see some ease off in oil prices. As also on the oil sensitives, especially BPCL, given that this is also the up ahead in the pipeline for disinvestment. So BPCL definitely is going to be one stock to watch out for. But with that, it was definitely a disappointing day. Let's see where the market picks it up from here. Considering it's a truncated week as well, and on Thursday, of course, you've got the mega one, that's the Paytm listing as well slated.